I am Pat Gage's AI clone. Pat Gage is the founder of Opportunity Creator. He personally researches and writes every script I share on this channel because the future is moving too fast for anything less than firsthand intelligence. The Opportunity Creator, Pat's real estate company, is the world's first educational and implementation solution to help real estate professionals and organizations get ready for the future of real estate. We help people understand and use AI to their highest advantage in our online courses. Learn more at opportunitycreator.com/courses. All right, folks, let me ask you something. What if I told you that BlackRock, one of the largest investment firms on the planet, just published a report saying AI is going to fundamentally reshape which real estate assets win and which ones lose? And what if I told you most investors are completely sleeping on it? That's what we're talking about today. This is Pat Gage's AI clone with the Opportunity Creator. And in the next few minutes, I'm going to break down BlackRock's April 2025 private markets report on AI and real estate and translate it into plain English for you and me as investors. No fluff, no hype, just the real takeaways. Here's the thing. BlackRock calls AI a megaforce. I know that sounds like Wall Street buzzword stuff, but stick with me. They're comparing this shift to the first industrial revolution. Steam engine, electricity, the internet, that kind of structural, permanent, this changes everything kind of shift. And we are still in phase one of this thing, what they call the build out phase. Tech companies are pouring record amounts of money into data centers, AI models, and power systems right now. The physical world has to keep up with the digital one, and that is a real estate story, folks. So the question isn't if this impacts real estate. It already is. The question is, are you positioned on the right side of it or the wrong side? That's what we're going to figure out together in this video. I'm going to walk you through the winners, the ones to watch out for, and the specific plays BlackRock is pointing to right now. Let's go. All right, let's start with the big one, data centers. Now I know what some of you are thinking. Pat, that's infrastructure investing, not real estate. That's not my lane. And look, I get it. I really do. But here's what BlackRock is saying that I want you to really let sink in. Data centers share the same fundamentals as traditional real estate: site selection, land availability, connectivity, and infrastructure. Think of it kind of like a really sophisticated industrial building, a shed with serious power. And the investment timelines, typical hold periods around 4 years. Sound familiar? Here's what's wild. In Silicon Valley right now, the vacancy rate for data center space has hit a record low of 2.9%, and monthly rental rates per kilowatt surged 43% from 2022 levels. That is not a typo. 43% in 2 years. And here's where it gets really interesting for us as real estate investors. BlackRock breaks down 3 specific ways you can play this without being an infrastructure fund. Let me walk you through them real quick. 1, land banking. You're buying land suitable for data center development. It's the highest risk play, but if you nail the entitlement, forecasts suggest IRRs above 100%. That is the swing for the fences option. 2, development. You're actually building either a powered shell where you provide the power and the tenant fits it out, or a fully fitted data center. More capital up front, but more control of the outcome. 3, operations. This is your core income producing play. Long-term leases with major hyperscale tenants, predictable, stable cash flow, more of a core or core plus risk appetite. And this one is the most accessible entry point for everyday real estate investors. Now, look, I'm not saying go out and buy a data center tomorrow. There are real risks here. Limited historical data. Technology can change fast. You need strong expertise and relationships. But folks, the opportunity is real. And you need to at least understand this space. The numbers don't lie. Okay, let's shift gears because not everything in this report is about data centers. There are 2 more sectors I want to walk you through, and the first one surprises people. Offices. Yes, offices. Here's where I see investors make one of 2 mistakes. They either say offices are totally dead, or they say offices are completely fine. Neither of those is right, folks. The truth is more nuanced than that, and it matters a lot for how you invest. Here's what BlackRock's actually saying, and I think they've got it right. Selectivity is everything. Occupancy rates are actually going up in most major markets post-pandemic. People are coming back Not always 5 days a week, but they are coming back. The data is pretty clear on that. But, and this is a big but, the gap between good offices and bad offices is widening fast. And AI is going to accelerate that widening. The winners are offices in dynamic mixed use city centers with amenities, hospitality, gyms, green space, easy transit access, places people actually want to go. Those are going to perform really well. The loser, the commodity B or C class suburban office park with nothing around it. That one's going to keep bleeding. Simple filter, is this a destination or just a box with carpet? Okay, now hospitality. And I think this one is flying under the radar for many investors. BlackRock has high conviction in hotels and the broader experiential sector. And here's the logic. Studies suggest that by 2030, up to 30% of all hours worked could be automated by AI. Now that sounds scary. But think about what that actually means for how people spend their time and money. More time for travel, more time for experiences. Health, wellness, hobbies, socializing. US consumer spending on experiences has already been crushing spending on goods since 2019. Hotels are already using AI to optimize pricing in real time and personalize guest experiences. That is a powerful combination of tailwinds, folks. Don't overlook this one. All right, last sector, and I want to be real straight with you on this one. Logistics. Now, logistics has been on an absolute tear the last several years. E-commerce tailwinds, supply chain resilience, and great fundamentals all around. And those tailwinds are still there. I'm not saying they're gone. But here's the risk BlackRock flags that I think every investor needs to hear. AI-powered warehouse optimization tools can unlock an additional 7 to 15% capacity in existing warehouse networks. Let me say that again. Existing buildings are going to get smarter and squeeze more productivity out of the same square footage, which means the market may not need as many new buildings. That's a potential oversupply problem, folks. And if you're not underwriting for it, you could get caught on the wrong side. Now, this doesn't mean logistics is bad, but it does mean you need to be selective. BlackRock's specific focus is on logistics in supply constrained markets, places where you genuinely can't build more, where the land is tight, zoning is tough, and competition for space is real. That's your protection against the AI efficiency headwind. If you're looking at a logistics deal right now, I want you to ask one question. How constrained is supply in this submarket? If the answer is they can build around the corner, be careful. If the answer is there's no more land, now we're talking. Okay, folks, let me bring it all home. Here's the big picture takeaway from this BlackRock report. AI isn't just a software story, it has a physical footprint. It needs land, power, and buildings. And the investors who understand that, who position themselves in the right sectors, in the right markets, they are going to be on the right side of this thing. The numbers still have to be penciled. That never changes. You know me, it's not a deal until the numbers pencil and it meets your criteria, but you also need to be underwriting through the right lens. And right now, AI is one of the most important lenses you can put on. Get out there, run the numbers, and let's rock and roll. See you in the next one, folks. To learn more on how AI is changing the real estate scene, subscribe to this channel. If you want to start using AI in your real estate investing, check out the AI course Pat has on his website at opportunitycreator.com/courses. See you on the other side.